What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, we have recently hit another milestone. In this video, I want to go over just exactly where the market stands, how to prevent yourself and your portfolio from taking a downturn. We're going to go over a couple different plays where you can actually profit when the market starts to pull back and also be able to hedge your portfolio. And then, of course, we're going to cover what exactly happened with AMC today. Let's get right into it. First off, guys, I want to point this out. This is the Nasdaq Futures ETF. It's the /NQ being shown on Thinkorswim. As you can see right here, guys, on the one-day chart, we are starting to show a little bit of a downtrend. You see like the RSI was a little oversold. The MACD is curling down, showing signs of a reversal. Let's take a look back. And this is very important for you guys to start to recognize certain patterns. I always like to look at the markets overall because a lot of our favorite stocks will get beaten when the whole market, has a little bit of a reversal. Okay, so let's take a look at this. Last time's RSI were high and the MACD showed a sign for a reversal. We had another retracement. Here was down about 7.5%. Okay, you go back over to beginning of February, that February 11th, boom, all the way down about a little bit over 11%, hit correction territory. All right, so you can see some of these patterns start to happen. And as you can see right here, like I've just said to you guys, the RSI is insanely oversold and the MACD is reversing. Well, what's leading to this? So one, the fact that high growth in the tech sector is still a little bit on the overextended side. All right, also, this does not help at all. The article right here talking about Cathie Wood is selling her China stocks. China is, and the Beijing crackdown is having a lot of issues with, Chinese-based companies listed on the U.S. stock market. This has happened before, and it really just brings a little bit of volatility and a little bit of fear for investors that want to throw their money into Chinese stocks, this is kind of just adding to a little bit of that sell-off. But pay attention to that stock. You can also look over at the SPY. All right, as it is showing a little bit sign of the same thing, a little bit of a pullback. However, the S&P has hung on much stronger than the Nasdaq. As you can see right here, it is following the 50-day moving average very strongly. You can see a little bit of a retracement, maybe down about 2% back to that line. If it begins to break that line, I would definitely look at the 100 moving average as the next form of support for the S&P 500. Something that you can completely play, guys, as a way to hedge your position, okay, or just to add to your portfolio in a very short-term way in case the Nasdaq begins to sell off, is the SQQQ. This is an inverse ETF off of the Nasdaq. When the Nasdaq goes down, SQ goes up. Okay, and as you can see right here, it maintained its low, it formed a double bottom, and it's since already trended up about 6%. Adding a small position like this can help through any downturns you have. I personally still hang on to a lot of my positions. I will add to my dips anytime my conviction stocks, my long blue chip stocks. I will continue to add to my positions when they do begin to pull back. But just to give you guys a little bit of an idea, okay? Let's get into AMC. Currently, we are sitting at the 34.50 mark. If you jump over to the one-day chart, we got as high as 38.55 before a little bit of consolidation happening, leading into a sell-off. I want to go over with what my prediction is that's happening. First of all, guys, you've been involved with this for a long period of time. You're very well aware that every Friday, come around 1 to 2 o'clock, it's always a pullback. Okay, whether that is market makers unhedging their positions for options that are going to be expiring. I think it's a very short time frame, or certain brokerages automatically closing out any options you still continue to hold. I will point this out, okay? Coming over to the 4-hour chart. Let me zoom in a little bit so you can see away from my face, guys. As you can see right down here in this little bit of corner, the MACD is starting to curl around to form a little bit of an uptrend pattern happening. And as well, guys, for the first time since we've been through all of this, all right, remember that the first time is the RSI is insanely oversold. It's still insanely oversold. We're looking at a possible bounce off of the 39.50, okay, 100 moving average to act as a little bit of a resistance. But just keep that in mind. I do want to highlight a couple other things that are happening today, and it's absolutely wild, guys. Look at the amount of puts that still have open interest. I mean, the positions have not been closed yet that are expiring out of the money. The $10, okay, even like the 13, 12, 14, 15. Look at the $20, guys, 90,000 contracts. The 23, the 25, okay, even the 30. even the 34, 35 we could hang on to, hang on to, let's say 34, it's still a lot. But even if we don't, even we break a little bit below that, by the time this closes in 45 minutes, it's an insane amount of put options expiring out of the money. Okay, still bullish activity coming in. Let me jump over to bar chart just to show you guys still bullish activity. AMC has a lot of contracts traded, and like I said, it's about a 60-40 call to put ratio still happening. So last thing, guys, before we end, I want to highlight this right here. If you can see, remember the last time we've seen a lot of red days in a row with a hard retracement coming back down to originally to that $42 level, was back in June. And if you remember, that was after the run up, and we saw an insane amount of call options, okay, in activity, bullish activity on that June 11th contract. Really just speculates that they're trying to drive this price down as hard as they can to be able to have all those call options end up expiring out of the money. And like I said, when it comes to the market makers hedging and de-hedging their positions, that kind of just intensifies whatever direction we are going, whether it is a bearish direction or a bullish direction. It's just going to continue to intensify that. So guys, that's going to be it for this video. If you're interested in joining our private community, first link in the description. We'd love to have you. I'll see you in the next one.